Hi, welcome everybody. So glad you can join us today. I'm Janine Purves. I am Chief Financial Educator of Waverley Wealth, and we are a platform that is helping to build everybody in Canada making better financial decisions one step at a time. Today, I'm really excited to talk about credit rating. It is so important to build up your credit rating and to have a base of understanding what it is, to be able to do things, to build assets, to get mortgages, all of those steps. And so today we have a guest speaker, Rina D'Avino of the Mortgage Group. And she is a mortgage professional. She's been in business development and sales for over 20 years. And she is going to share with us all of her amazing knowledge about credit rating and why it is so important for you. So Rina, thank you so much for joining us today.
Thank you for having me.
I am thrilled to be able to talk about this because I know it's come up so many times over the years when I'm talking to people, new buyers of homes, and just different steps. So I guess we need to start with credit rating. What is it?
Well, I think we can start off with a credit report. So a credit report is a summary of your credit history. It's created when you borrow money or apply for credit for the first time. And your credit report contains personal, financial, and credit history information. Your personal information like your name, your date of birth, current and previous addresses, current and previous phone numbers. It includes your previous and current employers and job titles. And it's also going to contain the credit you use, including credit cards, lines of credit, and loans. So inquiries from lenders and others who have requested your credit report. When you opened your account, how much you owe, if you make your payments on time, if you miss payments, if your debt has been transferred to a collection agency, it'll come up on your credit report. If you go over your credit limit, it'll show if there's been bankruptcy. So there's two main credit bureaus in Canada, it's Equifax and TransUnion. And these are private companies that collect, they store and share information about how you use your credit.
Okay, so basically it tells them all about your money history, is what it comes down to.
Absolutely.
Is there any way to hide it?
No, if it's reported by one of the lenders, it's going to be there. So no,
Okay.
It's going to take time for that to disappear. So
no top secret.
Yeah.
Okay, so I'm curious about how is it used?
Well, it's used, basically there's many different individuals that you or companies that use your credit. And these are banks, credit unions, and other financial institutions, credit card companies, car leasing companies, retailers, employers, landlords. And basically these businesses or individuals use your credit report to help them make decisions about you and whether to lend money to you, whether to collect a debt, to consider you for rental housing, to consider you for a job, or offer you an increase in credit. So it matters. It shows how well you manage your credit and how risky it would be for a lender to lend you money, how much money to lend you, and at what interest rates. Basically, yeah, you get points if you use your credit responsibly, and you lose points if you have trouble managing your credit.
Okay.
So if you look at the chart, the one that carries the most weight is the monitor your payments history. So it's your payments history. You want to make sure it's 35% of your credit score calculation. So you want to make sure that you always make your payments on time, that you make at least the minimum payment if you can't pay the whole amount in full. And you don't want to skip a payment, even if there's a dispute on your bill, because it's really important that you pay each month.
So let me just ask,
of course.
For example, a credit card, if you have a dispute on your bill, there's still a minimum payment there. Is that enough to manage your credit rating?
Yes, you want to pay at least the minimum. Don't not pay it. So I would definitely, pay it. Next would be 30% weight is used credit versus available credit. So don't go over your credit limit. If you have a credit card with a $5,000 limit, try not to go over that limit. Borrowing more than what's authorized on the credit card can lower your credit score. I know it says 50%, I believe, on the chart. You want to try to use less than 35% of your available credit. It's better to have a higher credit limit and use less of it each month. So just give you an example. If you have a credit card with a $5,000 limit and an average borrowing amount of $1,000, that equals a credit usage rate of 20%. But if you have a credit card with $1,000 limit and an average borrowing amount of $500, that equals a credit usage of 50%. So if you use a lot of your available credit, lenders see you as a greater risk. And this is true even if your balance is paid in full each month. So it's probably a good idea to increase your limit as opposed to spending more than that 50% or 40, 50% each month.
I know when I talk to people about finances, often they don't want to have extra credit available because they're worried that somehow that could be punitive.
Right. No, not necessarily. I mean, they have to have better control, I guess, and make sure that they don't spend it. And I guess knowing that if you reach your limit, it doesn't help you, perhaps that's a good way to justify having the increase in your limit.
Okay.
Okay.
Right.
So yeah, you just don't want to reach the limit each month, even if you're paying it in full.
Okay.
Okay. And then next would be your credit history, and that's 15% of your credit score calculation. So you want to try to increase the length of your credit history. The longer you have a credit account open and in use, the better it is for your score. Your score may be lower if you have credit accounts that are relatively new. So having an older account open, even if you don't use it, it's a good idea to use it from time to time and keep it active. You know, make sure that, I guess, if you have a card that you don't use very often, that there's no fee. So get one with a no fee so that you can have it, but longer history is very important. And also just to use different types of credit. So not just to have a credit card. So for instance, if you can have a car loan, or if you have a car loan or a line of credit or a mortgage, it's a mix of different types of credit, and that can be helpful as well.
Okay. All right.
And then you'll see public records. So this is 10% weighted. And if you have prior history of bankruptcy or any collection issues, those sorts of events are going to have a significant negative impact on your score. And then finally, you'll see your inquiries. That's 10% of the credit score calculation. We'll limit the number of credit applications or credit checks that you have. I mean, I know it's pretty normal and expected that you're going to apply for credit from time to time. But if there's too many credit checks in your credit report, lenders may think that you're maybe urgently seeking credit or trying to live beyond your means. So apply for credit only when you really need it.
So one example of that is if you're applying for a mortgage, by using a mortgage broker, you're applying once and then you can shop around for them. Is that a fair
Correct. So the idea would be, yeah, you don't want to go to 5 different lenders or 5 different brokers or brokerages and see what kind of rates you can get. It would be better to work with a mortgage professional that you are comfortable with and have them do the research for you, have them do the shopping for you.
Okay. All right. Thank you. You know, it's interesting. You talk about public records and the credit history. I think it's really important for people to recognize that sometimes they might want to pull that. And I want to share, I had a situation years ago when we were rejigging our mortgage. We were still pretty young. And all of a sudden they went and told us that they might not approve. I can't remember what it was. We were just changing who we were dealing with and they might not approve us. And I thought, wait, we have great credit scores. We are great clients. I knew we had good income. Everything was positive. How can they even do this? And as a professional in the financial services industry, I was really upset. And what ended up happening is that they said that we had a car loan on record that we didn't disclose to them. So because they thought we lied, they didn't want us as clients, point blank. So I was really surprised, one, that that's how strict it was. And two, that car loan had been paid off literally 6 months after. So here we are 5 years later or something like that. And it's still on my record and nobody cleaned it up. Right. So I was really shocked. We got it fixed. We got it the rate we needed, which was great. But boy, that was a real lesson for me to make sure you pay attention.
Absolutely. Errors. And yeah, I want to touch on that as well, because it is important to check for errors on your accounts. And I have had many clients that show balances owing when in fact they've paid off their balances. So it's really important to make sure that it's updated. Sometimes it just takes, there's a process. It could take up to 90 days for the lender to send it in and for your credit score or your credit report. Okay. So you want to make sure, because it's going to affect the loan amount and what interest it is, and so, or being declined completely. So it's definitely important. And the other thing as well, errors on your credit report, and you also want to check for signs of identity theft. Someone might be trying to open a credit card or mortgages or other loans under your name. So take a close look at your credit report periodically. It's always a good idea.
Okay. With all the increase in fraud, I think that is so critical. So I want to end this shortly, but I'd like a couple more things identified. First of all, what's a good credit score? What should people be aiming for?
I think 680 and above is a good credit score. Below that, the categories are poor, fair, good, very good, and excellent. But lenders always want to have at least a minimum of 680. If you can have over 750, that would be very good. Over 800 is excellent.
Okay, great. And what are the things that most people, especially if they're just getting started, need to do and watch for? Like, what are the things they can do to build up that credit rating as fast as possible?
Well, you definitely want to make sure that you're using your credit responsibly. So, and building a history of your credit. So it's really important that you are keeping track of what you're spending, keeping your payment history, your payment history low. Just definitely making sure that you are paying your bills on time. You're not overspending the limit that we've talked about. You just want to make sure that your behavior looks responsible overall, but definitely inaccuracies that we talked about, and just pay your bills on time, I think are really key to keeping your credit score at a healthy score.
Okay, and a few different types of credit potentially to make sure that you've got some exposure.
Exactly. Yeah, you want to have a sort of a variety, a range of different history. So really, you want to definitely make sure that you're showing your responsibility to these lenders. They want to feel comfortable lending you money. So.
Okay, well, thank you so much for all you shared today. I hope everybody is able to just figure out what they need to do today, maybe tomorrow, on how they can boost that credit score, because it is so important. Next time you buy a house, a car, even want to rent an apartment, you need to know that you need to have a good credit score or they might reject you. So take that in mind, and let's see everybody improving the credit score going forward. Thanks a lot for your time today, Rina.
Thank you, Janine. Thanks so much.